Hello everyone, and welcome back to the channel where we dive deep into the world of how to borrow stocks and potential short squeeze candidates. Today, we're putting a very specific company under the microscope, Cathay Precision, Inc., trading under the ticker VTAK. This isn't just a generic overview, we're going to examine exactly why VTAK has landed on our hard-to-borrow screener and what that could mean for traders. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Cathay Precision, Inc., or VTAK, is a company operating in the crucial healthcare and medical devices sector. They design, manufacture, and sell cutting-edge medical technologies specifically for the field of cardiac electrophysiology across the United States and Europe. Their lead product, the View Intraventricular Onset System, is a non-invasive imaging system that offers advanced 3D cardiac mapping, helping medical professionals with precision diagnostics. Currently, VTAK holds a market capitalization of just $2 million, making it a micro-cap stock. Its estimated float stands at 2.0 million shares. Let's look at the recent price action. Today, VTAK has seen a change of minus 13.85%. Over the last 5 trading days, it's down a significant minus 59.12%, and looking at the last 30 days, the stock has fallen minus 39.13%. Despite these drops, volume has been notable. Today's volume sits at 21,578,800 shares, which is 1.5 times its 30-day average volume of 40,414,900 shares. This high relative volume suggests considerable interest, even amidst declines. What's cost to borrow and why it matters? So, what exactly is cost to borrow, or CTB, and why is it so critical in understanding a potential squeeze? When a trader wants to short a stock, they first have to borrow shares from a broker. The broker charges a fee for this loan, similar to how you pay rent for an apartment or interest on a loan. This fee is the cost to borrow, typically expressed as an annualized percentage. Jones screen text, cost to borrow equals fee to borrow shares for short selling. A high cost to borrow indicates strong demand from short sellers coupled with a limited supply of shares available to lend. When the CTB starts to climb, especially above 100% annually, signals that maintaining a short position is becoming incredibly expensive. For VTAK, this number is a staggering 919.0% annualized, meaning short sellers are paying dearly to keep their positions open. Why the stock is hard to borrow right now. Now, let's connect that to Cathay Precision, Inc. VTAK. Highlight CTB number. The annualized cost to borrow fee for VTAK currently stands at an eye-watering 919.0%. That's not just high, it's exceptionally high. What's more, we've seen incredible momentum in this fee, with a rise of plus 275 percentage points over just the last 5 trading days. This rapid increase suggests that the cost to short VTAK is intensifying by the day. The supply side is also incredibly tight. There are only 25,000 shares currently available to borrow. Emphasize low number. Compare that to VTAK's estimated float of 2.0 million shares, and you see just how scarce borrowable shares truly are. Our internal composite squeeze score, which combines various factors like CTB level, momentum, borrow supply, and technicals, currently rates VTAK at 58.6 out of 100. This score puts it firmly on our watch list. However, it's crucial to understand that a high cost to borrow, even one as extreme as VTAK's, doesn't automatically guarantee a short squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to maintain their positions. Squeeze mechanics explained. For those new to the concept, a short squeeze occurs when a stock's price surges, forcing short sellers to buy back shares to limit their losses. Let's break it down. A short seller borrows shares, sells them on the open market, hoping the price will drop so they can buy them back at a lower price, return them to the lender, and profit from the difference. However, if the stock's price starts to rise unexpectedly, those short positions begin to incur losses. Couple that with a rapidly increasing cost to borrow, and the pressure intensifies. Many short sellers will be forced to buy back shares to close their positions and prevent further losses and escalating fees. This collective buying pressure can create a chain reaction, driving the stock price even higher, squeezing more shorts out of their positions. The extremely limited supply of borrowable shares for VTAK, at just 25,000, makes this dynamic even more potent, as it becomes increasingly difficult for short sellers to find shares to borrow or even to cover their existing positions without impacting the price. Dilution risk check. Before getting too excited about squeeze potential, we always run a dilution risk check. Dilution happens when a company issues new shares, which increases the total number of shares outstanding. This can significantly offset or even negate a short squeeze thesis because it increases the supply of shares in the market, making it easier for short sellers to cover their positions and diluting the value of existing shares. For VTAK, we've found good news on this front. There have been no recent dilutive SEC filings such as -1s, -3s, or 424 BS over the last 90 days. We also haven't found any recent reverse splits for VTAK within our look-back window. This absence of recent dilution or reverse splits is a positive factor for any potential short squeeze scenario, as it means fewer new shares are likely to hit the market to absorb buying pressure. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given VTAK's current setup, here's what astute traders should be watching for. Firstly, continued monitoring of the shares available to borrow. If this number dwindles further from the current 25,000, it increases the pressure on short sellers. Secondly, keep an eye on the cost to borrow. Any sustained increase from the already high 919% will make it almost untenable for shorts to hold their positions. Also, look for volume spikes that accompany upward price movements. While VTAK has been significantly down recently, a stock that has fallen -59.12% in 5 days with high ECTB can experience extremely volatile bounces if a catalyst appears or short covering begins. Any positive news from Catheter Precision regarding their cardiac electrophysiology technology or market adoption could also serve as a spark. In summary, Catheter Precision, Inc. VTAK presents a fascinating case study in the hard-to-borrow landscape. With an astronomical 919.0% annualized cost to borrow, rapidly increasing CTB momentum, and an extremely constrained supply of just 25,000 shares available to borrow against a 2.0 million share float, it clearly meets several criteria for being on our radar. The lack of recent dilution is another important factor in its favor. While the stock has seen significant declines recently, its unique characteristics warrant close observation. Remember, this is about education and understanding market dynamics. If you found this deep dive into VTAK insightful, please hit that like button, subscribe to the channel for more unique analyses, and let us know in the comments if you have questions about VTAK or any other stocks you'd like us to cover. We'll see you in the next video.